not say the currency word, but anyway, we can say it. So I think it's an easy question. Who owns Bitcoin here? Can you raise your hands? That's it? Everyone's scared. Okay, another question though. Does anyone own gold as an investment vehicle? Yeah, okay, so now, please give it up for our next panelists, which will do battle fireside chat. BTC versus gold. Let's give it up for Vays and Mamadou Toure.
All right, mic's on. All right. Hello, everyone. Thank you for coming out. This has been very, very interesting week with so many events. I know you had a few to speak at.
Thank you. In a very interesting week indeed. Quite exciting, and thank you for having us. And congratulations on this fantastic event.
All right, well, we got a little bit of time. We got 30 minutes. We're going to try to save a few minutes for questions, and we're going to do a little bit of a discussion versus the original gold versus the new digital gold, and where the potential of store of value of transactions are headed. So let's start with a brief intro.
So my name is Mamadou Toure. I'm the founder of Ubuntu Group, and in particular Ubuntu Tribe, which is a company that aims at democratizing access to gold by tokenizing gold and fractionalizing from as low as 5 cents for anyone in the world to be able to access digital gold certificate from as low as 5 cents on their mobile phone. And you, who are you?
Hi, hey everyone, my name is Vays. I come from a traditional Wall Street environment where I was for about 10 years. For the last 5+ years, I've had a YouTube channel. I've been educating people about the new world of cryptocurrencies, and organize some small events as well, where we also educate people on how to properly use these assets so that you don't get hacked, you don't get scammed, and things like that. This may be an interesting discussion. Let's start from the beginning. What makes gold so valuable and has made it valuable for centuries?
I mean, before I even go there, I'll pay a tribute to BTC, Bitcoin, whatever you want to name it, because it is that very thing that has brought blockchain to the forefront and changed the whole narrative and changed the game when it comes to peer-to-peer transfer of money. So for that, heads up. Now, the second thing, I also want to thank BTC for honoring gold, even if it's branded, right? So gold coin with a B on it. Don't do better in terms of acknowledging the value of gold, right? Now, for me, the difference, I would see BTC, Bitcoin, compared to gold. Gold is a store of value because you can use gold for so many other things. And when you buy gold, you buy its future value, whether it can become jewelry, it's used in aerospace, in medicine, etc. For me, Bitcoin, I wouldn't call it as such as a store of value. I would say it's a store of price, in the sense that most people who buy it hoping that there's going to be someone else who finds someone else buying at a higher price. While the intrinsic value of gold is a very special element in the periodic table that has particular specificity, and that has been there for many thousands of years, and regardless of geography or civilization. And as such, the value of gold, besides its cultural value, besides its economic value, is something tangible. That for me is the true store of value.
Yes, so I was a big fan of gold and silver prior to realizing the value of Bitcoin. And back in those days, when I was buying gold and silver, I also saw it as that. But now that 5 to 7 years have passed, there are several things that I realized, and it's more so in silver. Silver has been money longer than gold, but the reason for that is because gold wasn't divisible enough. And before the age of modern electronic banking, someone needed to buy their cup of coffee with gold, and it just wasn't scalable. So that's where silver came in. But with modern banking and modern technology, silver is losing its monetary premium. And we saw that recently when the ratio of price from gold to silver broke 120. Now, a lot of the gold and silver proponents always talk about that ratio should be 17-1 because that's the geological ratio in the ground. But that's assuming they're both equally being speculated on as money. But silver is losing that. And that's why silver continues to devalue against gold. And I see the same thing coming between Bitcoin and gold, because Bitcoin is just more portable and more divisible. But tell us about, how can you combine the two?
I mean, that was the very point for us to launch and tokenize gold and fractional, right? So that portability issue, you leverage on what Bitcoin brought to the table, which is the blockchain technology, so that you get your gold, refine it, store it in gold, and fractionalize it, and issue digital gold certificate at a minimum up to 1 milligram, right? And that solves the problem of portability. And if you think of it, the ratio that you're talking about between silver and gold, I don't see the same happening between Bitcoin and silver, for the simple reason that gold is something that wherever you go, you can trade it. Now, did you know that at least most of elite troops in the military, when you send them anywhere in the world, in their survival kit, you provide an ounce of gold. Why? Because with that, they will find their way back home, right? You can't say the same about Bitcoin in the middle of the Amazon forest. And the other issue also, when you compare those, fiat currencies, God knows what they're backed, right? The reality is, ultimately, with the goal that you have, I'm not privileged to be, let's say, a European. I'm from Africa, right? And most of our currencies, nobody wants them. Yet we sit on 46% of the global gold deposit. So the smart thing to do is to tokenize it. When you know that gold has gained 500%, now you leverage on the beauty that Bitcoin has brought to the market and address the issues and the limitations of Bitcoin by bringing something of a real store of value. And that's where I think when you compare both, one is speculative, the other one is medium of exchange and a store of value. If you don't want my currency, I'm sure if I give you tokenized gold, you'll certainly want to use it, right? And therefore, you bring billions of people into the global economy as they were excluded so far.
Yeah, it's funny that you said that story about the soldiers. I actually did not know that, but prior to a few years ago, I had like a 1 ounce of gold, like hidden in my bag that I was traveling with for years for same purposes, just in case. I know I'll always be able to sell it anywhere in the world. So it's interesting that you mentioned that. But tokenizing gold is actually not new. This was tried about 20 years ago with a company named eGold. Are you familiar with that?
Yeah.
A story. And the risk there is that when you have a centralized entity storing the gold and then giving people a token to use that underlying gold value, eventually, the centralized nature of it was its demise because the regulators ended up coming in and kind of confiscating the gold. How do you avoid that issue?
Okay, very, very, very interesting point, my friend. So 20 years ago, blockchain wasn't there, right? So the veracity and the accuracy, comprehensiveness of the custody couldn't be proved. And in our model, the gold is stored in different locations around the world with a regular reporting by some of the best auditing firms. Now, if you think of conjunction of timing, technology, and regulatory, I would say this is time for gold. Think of Basel III, for instance, the new regulations that were published 2017 or 18, requesting banks to basically use monetary gold, meaning that the paper gold will disappear and that gold, actually monetary gold, LBMA gold, will be considered as a highly liquid asset as good as money. So you certainly have the issue of centralization that you can go against by using blockchain technology and give the comfort to the population that their gold is actually where it's supposed to be, leveraging on the technology that is literally changing the world today. And when you realize also, I hear often, okay, the value of BTC and Bitcoin, it's in the network. Fair enough. Now, if we talk about network, I mean, I can call, some people in the Congo forest or in the Amazon forest, they're going to be part of the gold network. I'm not sure if they're going to be part of the Bitcoin network.
Well, do they have smartphones?
They don't need to have smartphones. We're talking about gold, right? And with your Bitcoin, they definitely need smartphones.
They do, yes.
Okay, so that's the point. So, and you can use USSD the same way as GSM that is backed by blockchain technology, and we're actually setting that up for those who don't have a smartphone. And the other issue that I see with BTC at this point, is the G coefficient, right? So you're talking about an asset, a digital asset, that 90% is owned by less than 10%. And most of them actually got into Bitcoin where it was priced between 100 and 1,000, right? And you basically reproducing the centralization model because they can do whatever they want to the market and make the market and just say, okay, gold is going to reach 1 million and everybody should hold it or buy it. And then they can sell to one another and guess what? Gold is going up. It's much harder to do with gold. And that's why if we talk about the ultimate underlying philosophy of decentralization, right? The credit I have to give to Bitcoin is the same credit I would give to Henry Ford, right? What it did with automobile made what we're doing today an automobile. Now, I can't say Ford is the best automobile brand today, but we need to give it that credit. And I'm a big fan of it, but we also need to. And it's hard for me in this room, right? So I'm in a room with Bitcoin maximalists and crypto enthusiasts that I come with tokenized gold. It's a bit like going with a bottle of champagne to a Muslim wedding. So I hope I won't get tomatoes from you guys, right? So technically, it's important also to look at the different and I'm Muslim, so good. So I look at the different dimensions of the problem.
Yeah, I actually agree on the car analogy. The modern day Tesla is not that different than the Model T Ford from 100 years ago. It has not changed all that much. In fact, there were ideas to build the modern day Tesla. It wouldn't look as nice, of course, but the concept of it running on electricity, even way back then, 100 years ago, and that probably could have been even a better car back then as well. So, a couple of things you mentioned there. Let's go with, hopefully this will be a short one because then we're going to talk about the decentralization aspect. Why do you think the price of gold has not gone up with inflation and the amount of money that's being printed all around the world? I mean, the United States, a third of all United States dollars have been created in the last 18 months, and gold is still struggling. What are people missing?
Okay. So what is important to understand I would say Bitcoin has largely benefited from that, right? And the point with gold not really gaining value is because ultimately the question about gold is linked to markets more than it's linked to inflation, right? So expect a market crash and we'll talk about where gold is going to go. So if you look at the history, right, of the gold price versus the stock market, the other thing is that the stock market has boomed despite inflation. And why has it boomed? Very simple. You print money, yeah? You give it to companies, they buy back their shares, the shares goes up, and the stock market goes up. No need to buy gold. But how long can you do that? Not forever. One. Second, every time, if you look, since the correlation of the gold to the dollar in 1971, since Nixon, every financial crisis, the gold goes a bit down. Why? Because people liquidate their positions and you have
they need to feed their family. So if
exactly.
you lose your job, you're going to sell those gold teeth if you have them. Exactly. If that's your only option.
You sell whatever you have. So you're going to sell the gold. And then after that, gold ramps up. 500% in 20 years, 5,000% since 1971. And 10% every year over the past 7 years. Last year, it gained from 40 to 50%, 40%, I would say. Why? Because you had a COVID crisis. So the gold went up. Now, expect with the rules of Basel III, with the global financial crisis that is looming, probably if not this month, for the next 6 months, you and I will have a chat. And guess what? There is a huge issue looming on Bitcoin, and I hope it doesn't get too bad, is the executive order that might come from the US anytime soon. Right? So what happens when you talk about store of value? Right? So that executive order to highly regulate crypto, then the institutionals might pull out. And what has driven the price of Bitcoins today is all those institutionals coming in from Tesla and you name it. Now, if they get hit in the finger to drop it, expect a crash.
Oh no, I completely agree. If the institutions are forced to liquidate the Bitcoin, then yeah, then the asset is certainly in trouble, and especially since the custodians are holding a lot. Companies like Coinbase, companies like Grayscale, they're holding a lot of it on behalf of many other people. And if those the other option is these companies might leave the US. Like, I would not be surprised. Like if Microstrategy is told to sell their 100,000 Bitcoin, they would not be an American company. They will immediately they'll be a company of another nation. I mean, them holding that asset is just way more important.
Exactly. And didn't the same Microstrategy buy 50 worth of gold not long ago, the AI company?
I'm not sure if they were buying gold before that, but now they've moved on to the digital gold. And but what do you see? Do you not see advantages of what we now refer to as digital gold, where the fact that it's trustless trust, and that sounds strange, but I always say one of its biggest qualities is the fact that there isn't anything physical to potentially have confiscated. And because of that, that is what really gives it value, is the fact that you can't touch it. You don't have to store it physically. And that is that was the trick that made it so valuable and so far unstoppable.
It's a very good point, right? But at the end of the day, the chair I'm sitting in is physical, the water I drink is physical, the house I live in is physical.
Yes.
Now, I fully agree, it makes it harder to confiscate. But it's a double-edged sword, right? Think of this. I decide to regulate. I'm in China, I'm in the US, and I'm in Europe. And suddenly we say, okay, no more Bitcoin, right? Whether it's physical or non-physical, the main issue you're gonna have is you lose the network effect, right? Because people will pull out of it. And because it's effectively non-physical and purely digital, it could be like a balloon. If you have an issue with gold, there's a reality. You take your gold, right? It will be worth something to the technology manufacturer.
Right, but it's so difficult to move it. Like, you can't just take your gold on an airplane.
Because you still think centralized.
And leave with it, because there's lots of restrictions. India has big restrictions on gold going in or out of the country, and that's been one of the issues. As an example, my family fled the Soviet Union back when it was a communist country, and it didn't matter how much wealth my family had. It wasn't much, but it was more than $100 US per person in the family. But that was all we were allowed to leave with. And even if we had gold, we would not have been able to leave with that gold, and selling it would not have held. And again, this is where this digital gold asset can potentially allow people that are leading certain jurisdictions to actually, it's not illegal, it's not illicit value, it's something you honestly earned throughout your life, but then you're not allowed to use it to start a new life somewhere else.
Okay, let me give you an example, right? Let's say you sit in, I'm going to take a big risk. I'll take the country of my friend Juliet, and you in St. Petersburg, right? You buy gold, digital gold, let's say our tokenized gold. Why do you have to carry it on the plane? You bought it, yeah? And we have a technology that with your credit card, you can go and spend it in Monaco or somewhere else, right? Now, let's say you're a trader in the middle of a bush in Mali. You're not going to carry your gold, although your country has so much. You go online, you buy your gold, you have your debit card, credit card linked to it, and then you make your purchase. It's a game changer. That's the beauty of technology, one. Second, the old centralized model of having all your gold in 2 or 3 places is over, right? There are super advanced technologies today where you can distribute in very secure places, in boxes that are atomic proof, right? In so many locations that gold, right? That nobody would technically know that it's gold in there, right? And you move it in country based on wherever it's needed. So we live in a time where I do agree that digitalization is the future. That's why we tokenize gold. But we also need to be cognizant of the fact that matter is matter, right? And when it comes to a physical asset, if it allows me to buy food, if I know somebody next door will want it because they need it to do something practical with it, it has value. And we'll probably get to a point, I don't disagree, where the money will be fully dematerialized, but it will take a different kind of civilization. And luckily, Bitcoin has kickstarted that process. But until we get there, gold will remain gold. Like gold has always been gold.
All right, this has been a great discussion. We do have about 9 minutes for audience questions, if anyone has any, about gold, tokenized gold, or digital assets.
Someone has some question. Yeah, I can see you back there.
Sorry, Juliet.
Yes, please.
Hi everyone. My question is, you say that gold is store value, right? And the current inflation of gold is about 2% per year, right? New gold coming out. So in the next Bitcoin halving, when the inflation rate of Bitcoin will be lower than the inflation rate of gold, you guys still think that gold will be a better store value than Bitcoin?
Okay. I've never heard in my life, in 20 plus years experience in banking and macroeconomics and finance, inflation of gold. I didn't know that word exists. All I know is inflation of money. Gold is an asset, it doesn't inflate, right? So technically, if you were in 1921, you would buy with, let's say, 1 kilo of gold, you would buy the latest sports car. In 1971, with the same kilo of gold, you would buy the latest sports car and probably 5 times the amount of money for that same sports car. 2021, same 1 kilo of gold, get you the latest sports car. And 20 times the amount of money, so many trucks. That's inflation. Gold has remained the same, my friend.
Yeah, I want to.
Yeah.
I'll answer that as well. I do see your question, and gold is a great store of value. I mean, the saying is true. A 1 ounce gold coin would have bought you, buys you a really nice suit today. Would have bought you a nice suit 100 years ago, and it would have bought you equally as nice of a suit 1,000 years ago, or maybe not that long ago. But I don't know if they were making suits back then. But the difference is that an asset like Bitcoin or even the stock market, personally, I consider the stock market a great store of value. the stock market also adjusts, besides inflation of the fiat money. It also adjusts for the advancements of technology, because Tesla is now in the S&P 500 and something else got kicked out. Though that's a terrible example, because the thing that got kicked out actually outperformed Tesla the following year, which was very ironic. But so if that gold coin was sold 100 years ago and put into the stock market with dividends reinvested,
you would own the stock market.
You would own, yeah, lots and lots of suit factories all around the world instead of a single suit today. But but you're right, that stock to flow ratio matters, but speculation matters more. What drives the price of gold and what drives the price of an asset like Bitcoin is speculation, and it's 90% speculation. And this is why gold had its big bubble back in 2011, and then it fell 50% over the next 6 years. Speculation is still the main driver of almost all assets, real estate included, and maybe if we were still on a gold standard, that wouldn't be as visible.
We have a next question. Can we go to the next question?
Please.
Thank you, panelists, for putting this BTC versus gold. I have one question. If I want to transfer my wealth within a minute, can I transfer with gold to the another nation? Like the process happened in Afghanistan. They have billions of dollars of wealth there, but they cannot transfer their wealth to their loved ones or to their next relative in another country. That can I transfer with the BTC or in the cryptocurrency sector?
It was very hard to understand the question. Olga, can you repeat it?
I am asking that, can I transfer my wealth without the intervention of any government within a second of time with gold? Or is gold tokenization?
Okay. So first of all, gold is a commodity, right? Every nation have their own regulation, right? And we are a Delaware registered company, and every country we operate, we respect the regulation. So the one thing about the case you're referring to is very simple, is that you say, if you're in Afghanistan, for instance, right? You could possibly go online, right? Buy digital gold, I mean, depending if we're operating in that country, right? And your money stays in Afghanistan. But your gold is not in Afghanistan. I'll let you do the math. So it becomes our problem to manage your money. I think I've answered your question without saying too much. Thank you. Next question?
Yes, we have another one.
Thank you. Hi, Mamadou. Hi, Toure. Thank you so much for a great chat. So I have a question. My name is Danosh. I'm a co-host of the Crypto Shakes podcast. So my question is, 3 days ago, JP Morgan, they released a note to the investors. They said, institutional investors are now moving more towards Bitcoin as a hedge against inflation. So in my opinion, you should always follow the money.
Okay.
What do you think about it?
Okay, I was sitting with the Vice President of JP Morgan, just when COVID started, and expect their gold-backed tokens soon. That's my best answer I can give you. You won't expect them to launch Bitcoin, but they're clearly going to launch a gold-backed token. Now, it told you how the markets work, right? You get some of the big boys to say something and everybody follows. I've been in finance for long enough, right? And if we are not shrewd enough to read through the, right? That's all I can tell you on stage. So, did you also hear 2 days ago the news about Joe Biden coming with potential executive order on Bitcoin? Doesn't matter, does it? That's all I have to say.
Thank you.
If you don't check Google, YouTube.
One more, last one.
Yeah. Hi, this is Derek. I was just question. Is do you have a gold coin at the moment, or is it?
Yes, we do.
Yeah. My question was, is it backed up by gold? Like really?
100% backed by gold. Pegged to gold, LBMA price gold, monetary gold.
Okay, that's important. That's what I want to know.
Yeah, if not, you can't trade it. At least use it as monetary gold and get cash out of it.
Whether it be your gold-backed token or BTC, it's all asset, and you have an economic model behind the asset price. The whole argumentation for digital asset is millennials in the next 5 to 10 years will be shifting the consumption towards a digital economy, a digital ecosystem. This, for example, will inadvertently challenge the economic model behind gold pricing. What we're betting in the digital world is what the new generation, the new wealth being created, what would they want, and how will this affect the economic model of gold price? Okay. Will the millennials consume gold as their grandfathers would be doing?
Okay, so just one thing. The most indebted generation in US history is the millennials today. That's why they've gone to crypto. Now, they not necessarily take all their risk on Bitcoin's volatility, but by the moment gold gets digital, they know they're making a safe investment. And because it's digital, they'll jump on it. We've done the survey. And guess what? The point is they have physical gold. It has value for their parents, and it has value in their society. They struggle to explain to their parents how Bitcoin works. It will take them a fraction of a second to explain how tokenized digital gold works. And for sure, they might get funding from their parents to buy it. Last question?
Yeah, that was it.
Yeah, that was it. I think
right.
No one wins. All in all, thank you so much. I think you can catch up with Mamadou and Tone because they're still here in the audience and the after parties and the networking events. So thank you so much. Let's give them a round of applause.
All right, thank you everyone.